Hello everyone, and welcome to Business Propel's Masterclass, the ultimate cheat sheet on business planning for growth, capital or exit. Today we are joined by John Hagerty from Be Business. Just a little bit about Propel to start off. Business Propel is an online improvement software that helps you to achieve business goals and plan for the future. We have a business planning tool that helps you keep your goals and objectives top of mind, which is very pertinent to this time of year and what John will be speaking about today. And a little bit about myself. I am substituting in for Phil Parisis today and am the digital marketing executive here at Business Propel. I have a focus on producing engaging webinars and events, so please feel free to leave any feedback in the comment section about this webinar, as we would love to hear from you. And remember to participate in the conversation. You can contact us to the right of screen using the chat section and questions tab. We will also have some polls online, so do not hesitate to get involved and ask questions. We have our first poll on screen now. So feel free to take the poll and answer the question. Do you have a business plan in place? And we'll just give people a few seconds to answer that question on screen now. So we've got a few different responses coming through. Yes, I have a business plan in place. Yes, but I do not check it regularly. And no, I do not have a business plan. Thank you for responding to the poll. And now I'll hand it over to John to introduce himself and talk through business planning. Over to you, John.
Thank you very much. And thanks everyone for making the time to be here today. Hopefully we can get through a whole lot of information that's going to help you get in mind the best way to approach your business planning. I know it's one of those really dry topics and people can not really look forward to doing it. And I thought I'd start by just giving a bit of a background on myself and the first approach I ever made to writing a business plan. And it happened quite a long time ago. I would have been 19 or 20 at the time. And I found myself working for a very fast startup, very well-funded startup. It was backed by Westfield Shopping Centres, Village Roadshow and Channel 9. And so consequently, as I said, they were quite well-funded, and anyone who's been associated with a well-funded startup will know that if you show a bit of promise and you put a good amount of effort in, you can move quite rapidly through the ranks. So I got promoted 6 times within 9 months in that organisation. And I quickly found myself in a situation where I had 75 direct reports. I was in charge of tens of millions of dollars worth of assets, and I was required to write a plan that would show how I was going to deliver on the budget that they wanted me to achieve. And not having any kind of formal qualifications or background in business whatsoever, I really had no idea what to do. And as I said, it was quite some time ago. Google wasn't actually a thing, so that wasn't really a tool that we were able to avail ourselves of at that time. So using really little more than just my wit, my library card, and a wing and a prayer, I had to figure out for myself exactly how to go about putting together a plan. And it's the thinking that went into that, the questions I asked myself, that's really guided the way I've applied business planning to all the different situations I've had to approach since then. And I've worked on these sorts of projects with companies who are looking to start a brand new operation or start a brand new business. They're looking to grow the company that they've got, or they're looking to achieve funding for the company that they're in, or they're looking to exit. They want to sell that company. All of those situations call for a business plan of some description. And we're going to go over today what those different types of plans are, how you approach them, and who you actually put them in front of. So that was the second poll that Sasha was alluding to. So do you want to take them through the detail of that?
Sure, John. I've just got some query through from a few people that we might be experiencing just a little bit of echo. So just bear with me just a second.
Sure. Should we test that?
So it should be fine now. I'll just double check in the chat. I think as well, so I think it should be all good to go. If we set that poll now to what outcome do you need a business plan? So I'm just publishing that poll now. We've got starting, funding, growth, or exit.
Great stuff.
So if you look to the right of screen in the poll section, if you wanted to take those polls, we've got one for growth. We've got, I think, a few more still waiting to answer. More for growth as well. And we'll just leave those polls up. So if you'd like to have a chat, John, further on to those topics, we can progress through and go back to the poll at a later stage.
Excellent.
Yeah, so why do people fail to write their business plans down, or how does a person actually get started?
Sure. So I find that one of the main reasons why people fail to write their plans down or get started in the business planning process or get derailed is they're typically, like I was, pushed into it by someone other than themselves. So the majority of the reasons why people go into business planning is because they need to, they're asked by a bank, they go for funding to produce a business plan, or if it's an internal situation, you know, the manager wants them to produce a plan of some sort. A lot of people find themselves quite comfortable just operating through their own thinking and not writing their thoughts down. And if it's a plan only for yourself, you're less likely to write it down. So when they go to do it, the first thing they do is what I couldn't do, they go to Google. And I'll jump onto the Google search engine and they'll ask for a business plan. They might ask for a template. They'll get loads of results. They'll download that template and they'll have a crack at filling that template out as it's laid out. And the problem with that is that if it's not purpose-built to the objective that they're trying to achieve, they're going to encounter questions or directions from it that feels like it's misleading them or is not appropriate. And if they can't answer those questions properly, it can, you know, just throw you off your track and you lose momentum and basically throw it in the bin. So I always say that before you select a tool, you first have to define exactly what the job is that you're trying to achieve.
What you actually want from it.
That's right. And so that leads me to what I was speaking about before, about the foremost crucial questions that you want to ask. And this is the thinking that led me to how I achieved that business plan all those years ago. And it's the same thinking that applies today. You just got to start with really clarifying the objectives of the organisation. What's the group actually trying to do? Is it about growth? Is it about starting something new? Is it about achieving funding? Is it about getting into a position where you can sell the business to another party? And then the finer detail of all that. We'll go into some finer detail questions about all that first, but you start from that perspective. Then the basic question you want to ask yourself is about how we actually intend to achieve those particular objectives. And answering these questions to yourself is the first thing that tells you which sorts of tools are going to be most appropriate in attacking the challenge in front of you. You also need to ask yourself who we're communicating with, who we're going to be convinced. So really, at its core, all of these documents, all these business plans, they're effectively a sales tool in the sense that you are trying to convince somebody of something. You're either trying to convince customers to use your product or service, you're trying to convince investors to back you, you're trying to convince a joint venture partner to go into business with you, or you're trying to convince somebody else to buy your business entirely. It's all about that. So who is that group that you're talking to? What exactly are you trying to convince them of? And only then will you be able to figure out what's the best format to communicate with them. So what template, for example, should I be using? And what other sorts of tools should I be using to actually help me do that? When you've got those questions answered and you've got that firmly in mind, when you look at those tools, you can actually make sense of how well suited they are to what you're trying to do and what changes you need to make to them. So, as we said, there's 4 reasons why you need a business plan. And the start, growth, fund or exit specifically. I think in the marketing, I've got a company in the marketing for this event today, we did say there was 5 questions. So let's just say that the fifth reason why is because I'm telling you, all right? And we'll just leave it at that. But start, go, fund or exit is the 4 key areas, and the formats and types of business plans that apply to these areas. With the start and grow, there's your run-of-the-mill business plan, which could include some kind of a feasibility study around what it is that you're actually proposing to do. There's a marketing plan. And what's the difference between a business plan and a marketing plan? The marketing plan will probably become more action-orientated in terms of the exact steps that you're going to take to deliver on the objectives. And then the operational plan is on the delivery side. So if you kind of think of 2 sides of the same coin when you're looking at it, on the one side, you've got the marketing side, sales side of the business, which is all about creating demand. And then on the other side of the coin, you've got the operational financial side, which is all about meeting that demand, delivering on that. And so you can break the plans up into those separate sections. And the reason for that is who are you talking to? Those are internal plans, and you're talking to different parts of the business about how they're going to get involved in delivering on the organisation's objectives.
We actually just have a question through. In your experience, what is the best format to communicate a business plan with staff? Did you have any sort of advice for people trying to communicate their overview business plan, or just the general direction of the business?
So it's typically going to be a stripped down version of the overall plan. There's a lot of detail that your staff won't necessarily need, and it also might vary depending on the size of your business and the departments that are in the areas that are going to be actually most important for them. And you're probably going to take the core elements of the business plan and put it into some kind of a slide deck and do it as a public presentation.
Sure.
Or you might actually want to do something to video and make it available into the company drive for people to access. But at the end of the day, it's really getting clear on what are the key elements that they need to have their head around so that they can be in alignment with where the company is going, because staff alignment is really key. And using a communication methodology that fits you and fits the culture of the organisation that you're in. So it can vary, but typically you would just take the key elements and make a slideshow out of it and try and make it a bit more interactive to get buy-in and engagement. One thing I like to do though, when I'm putting any plan together, is to get the key people from the organisation together, elements of the staff, and engage them through a lot of workshopping and feedback mechanisms, like the tool that we're using right now to get feedback from you. You can use these sorts of things to actually get people's feedback so that when the plan is presented to them, they can actually see how they've played a role in its formation and how some of their feedback has made its way into the plan. Because
part of the strategy going forward.
Exactly, because without the buy-in,
they're the ones doing it.
That's right. I don't really like spending time on producing useless documents. These things need to be a living document, and they need to actually guide what actually happens next. And as soon as something shows itself to be proven wrong, then the document's got to be updated, the plan's got to take a slight turn, and that's got to be communicated back through all the teams as well.
Right.
So that was a question from Jennifer. Hopefully I answered that for you, Jennifer.
So moving on, I guess, to the fund section as well now, John.
Sure. So funding and exit again, and so we've divided the quadrant up into left and right because there's some similarities that go with the two groups. So on the right-hand side of the quadrant, it's quite often they're transactional documents for the funding and the exit. It's about driving a transaction of some sort, selling part or all of the business. Or even if it's debt funding as well, it's still a similar kind of approach. So the different types of documents are a pitch deck. And so if you're raising capital from investors, you almost certainly have a pitch deck. The problem I find though is that a lot of people are out there raising money right now using only a pitch deck, not realising that they're not compliant with the Corporations Act in terms of how you actually go to market to do these kinds of deals. The Corporations Act is pretty clear that there needs to be an offer document of some description, and depending on who the market is, so whether it's what's called a sophisticated investor or a retail investor, will determine what kind of document you need. An information memorandum is all you really need if the party that you're going to is what's classified as a sophisticated investor. But if you're going to retail investors, you need potentially a prospectus, which is an enormously expensive document to produce, or you could be doing what's called an OIS, or an offer information statement. It's a bit cheaper. It has slightly less information in it than a prospectus, but it still is pretty expensive. But if you want to go to retail investors for a raise, to be compliant, you need to be doing those sorts of documents. To anyone else, you have to do an IM, or an information memorandum. And that's a document you need for an exit as well. But typically you also prepare a pitch deck, which again is going to be a reduced version. Its main objective is to sell the sizzle kind of thing, and all of the risks, factors, and all that sort of thing that people need to make themselves aware of. They're in the other offer documents that you make available to them. I think people get frustrated because if you've ever raised capital before, you'll prepare these documents and you'll give them to an investor. They'll ask questions and you'll say to them, did you read the information memorandum? And 99 times out of 100, they didn't. But if you don't prepare the document, you don't provide the document, and it's not part of the process, you're actually making yourself liable to a claim at a later date to an unhappy investor. So it's best to do it. And that's another really good reason to do a business plan, because sometimes you have to.
Yes, tick the boxes.
Okay, so there's some questions that you need to ask regardless of which quadrant you're currently relating to right now. The first one is, what's the problem that I'm trying to solve? And that's a general business question, because at the end of the day, all of these plans are all about selling business or selling what products or services that the business has. So what's unique and different about this particular company and its approach to market? You've got to be super clear on that. Otherwise, the business planning exercise is pretty redundant. And the other question is, why does the market care about it? It's a pretty critical question. So if the market doesn't care about it, and this might seem like a silly question, but I quite often see people coming to me with new businesses that they want to launch, and they've come up with this fantastic solution to a problem that they've not convinced anybody that they've got yet. And so that's another exercise that you have. A lot of the best businesses out there actually start that way, about identifying a problem. I think one of the classic examples is actually women's razors. The razor companies wanted to sell more razors. The only market that wasn't using them was women, so they just convinced all women that they shouldn't have hairy armpits or hairy legs. And
finding what people want, the annoyances in society, I guess. And
if you look at some of the early examples of the ads that were used around all of that, it was really crazy. They just put ads in the paper saying, do you have a problem with unsightly leg hair? And all of these women went, oh, well, I didn't before, but I guess now I do. Yeah. So they sold a whole load of razors, and they continue to today. So that's the thing, is that, if you think that the market should care about it, you've got to really think about how you're going to convince them to make that change. And that leads into questions around starting a business. And the top question for that is, can you create a whole new category? That's a classic example of creating a brand new category.
That niche market, yeah.
Which was massive.
Yes.
It basically duplicated the market that was already existing. Everyone who wasn't using the razor now was.
Yeah.
So can you do that? That should give you an indication of how worthwhile it is to invest yourself and potentially invest other people's money into what it is you're trying to do. If you can create a whole new category and launch it in a really significant way, then that's a really compelling reason to make sure you have a proper plan in place that shows not just how you're going to convince people and not just how you're going to get sales, but how you're going to fulfill that too. How can you scale to meet the demand that you want to create? So with the growth side of things, you need to be able to demonstrate, as I said, the feasibility of making that investment. But the other question that you need to answer for yourself too is, how fast are you going to grow, and will you be able to fund that growth? And we're going to talk a little bit later about what is fast growth. I've mentioned before that I've worked with a lot of fast growth groups, and anything over a certain percentage in annual growth is usually not something that you can do self-funding. You usually have to get capital from somewhere to make that happen. So It's a pretty crucial question to get an understanding of. If you think the business is going to grow at a very rapid rate, you need to know that you can either through debt or investor capital, you can actually make that work.
And make demand, I guess, if it does grow.
That's exactly right. So on the funding side of things, the first question that you really want to ask yourself there, raising capital from investors is, it's like selling anything. It's like selling the product or service that your company has, except this time you're actually selling equities in the company itself. And you have to get an understanding of who's actually going to be attracted to that. What's the market for that? There are all kinds of different investor profiles out there. And who are the ideal ones for your group? There could be strategic investors. Are you after smart money? I always personally think smart money better than dumb money any day of the week. But it can bring vested interest that you also have to manage as part of the process of working with those people. But the different investor profiles are Triple F unkindly stands for family, friends and fools. And that's usually where people first get their initial seed capital from, particularly in Australia. Raising money in Australia is quite different to raising money overseas, particularly in America. There's not the same risk appetite here. So typically you need to, if you can get to first sales self-funded, you're going to have a much more successful capital raising process. But the other types of investors, high net worth individuals who've been successful in a particular area, and that can help form your profile. You know, I find investment from people who have been down a similar track or a related track to me before. They'll get what I'm doing and they might want to invest in the future. There's private equity firms, there's venture capital firms. Family offices are kind of like an extension of the high net worth individual. It's a wealthy family who have significant investments, and they have a professional office and team of people who look for appropriate investments and manage those investments on their behalf. And investment banks, which in Australia, they tend to be kind of a hybrid between private equity firms and venture capital firms. But there's also the debt funding side of things as well. And, you know, can you actually fund things through debt, which means that, yes, you're going to have to pay for that immediately. So the advantage of getting funding from investors is that you pay essentially down the track when there's some kind of an equity event of some description. You sell the company, that's when they get their money back. Or if you become profitable enough that you can actually start paying out dividends, they get some of their money back at that point. But with any kind of debt financing, you're going to be having them to service that debt immediately in some description, even if it's interest only. But there are all kinds of different sorts of debt models that you can look at that can be useful as well. So the third thing that we're looking at for funding as well is how does the opportunity look more appealing than all of the other offers that are out there? And I have to tell you, as someone who's very active in the private investment space, I personally look at anywhere between 200 and 300 deals a year for looking for the clients I'm going to work with to raise capital for. I'll only ever work on maybe 3 or 4 deals within that year. And that's a drop in the bucket to what some of, say, the private equity firms or the venture capital firms, they'll look at substantially more than those sorts of deals. And the reality is most people who want to raise capital are unsuccessful. And so you've got to find some way to actually make it stand out. That category killer example that I mentioned before, that's certainly something that you want to be thinking about. How is it going to do that? Do you have the right team? Those kinds of questions, the sorts of things that you need to really have in mind, how you're going to present that in a compelling way. For exiting, it's a similar sort of thing again, except what's the persona of the purchaser? Am I looking to replace myself? Is it someone just like me? Am I going to basically sell the company to someone who wants my job? Or are we selling the assets of the business to someone who's going to exploit them in a completely different way? And if possible, can we do what's called a strategic exit? And I guess the short explanation for what that means is selling the company to somebody who can make substantially more money out of it than you ever could because of what they already have. If there's a way to structure a deal with someone like that, then there's a way to change the nature of the conversation being about the the upside that they can achieve by taking on your business.
They've already got potentially a community behind them asking for your particular type of business. It could benefit both.
That's right.
Yeah.
So just imagine you're a smaller business, maybe you're turning over between $2 and $10 million or something like that, and you want to sell yourself to a listed company who is, maybe in the hundreds of millions in terms of their size of turnover. They have a massive customer base, but they don't currently offer what you have, and what you have is a good match for them. That's a classic example of what would make for a great strategic exit, and the potential to change the conversation with that group into not being what's the multiple of EBIT or EBITDA or net profit after tax or whatever line of profit you want to look at, how many times that will determine what you buy us for. How about we talk about how much money you can make out of buying this company, and what portion of that should be given to us as part of the exit. It's a great conversation to have. Those are the sorts of exits I like talking about. So, that's really what that next point is talking about. So, how do we approach writing the plan? Well, it's, again, as I said before, it's a communications document. So like any type of presentation, there's a basic format for how you approach these sorts of things. 101 in presentation is you start by telling them what you want to tell them, then you tell them, and then you tell them what you've told them. And in a business plan setting, what that actually looks like is an executive summary, usually of some description, body content, followed by a conclusion. And when you look at all the different templates that are out there, whether it's just a slide deck or a full business plan template, it's always going to have that kind of an element to it, and it's how you apply the content that you've got to get across to those.
We just had a question come through from Karen Kennedy.
Yep.
How detailed does a business plan need to be if I'm not looking for investment and only a small business, less than 500,000 turnover? It is only for direction and to write down goals and exit strategies.
Great, that's a really good question, and maybe it's one that a lot of people relate to. And I would say that your plan needs to be as detailed as you need to make it in order to achieve the objective that you've laid out there, which is you need to give yourself direction in how to actually achieve those things. So if you go back to the 4 questions that I said that I need to cover at the very beginning, these slides are available to people after today, aren't they?
Yes.
So the slide with those questions on it will be there. And that's, what are the objectives of your organisation? So you're turning over $500,000 now. Do you have an objective to grow? Is it to grow significantly? What do you think your pathways are to doing that? And who do you need to communicate this direction to? Is there other members of the team that you need to communicate this with, or is it really just for self-guidance? And I would suggest that you really only need something quite brief. It only needs to go into more detail when there are other stakeholders involved. If you need to get debt from a bank in order to achieve some of what you want to achieve, you're probably going to have to do a more formal-looking business plan. But if it's really an internal document, you really can just do it in a slide deck type format. It's perfectly fine, as long as it achieves the end that you've asked for.
In just saying that as well, on Business Propel, there is a basic business plan to start you off, which I'll talk to at the end of the webinar as well.
Right. Good question. Thanks, Karen.
So I think we're on to how your competitors can help you develop your strategy.
Yeah. So it's an interesting one. I'm sure your competitors really don't intend to help you do that, but it's really just a question of how you look at them and what they're doing in the marketplace. So I've just got this little graph here, and I'm going to use the cursor here to kind of talk around the screen with it. But it's about identifying your clear point of difference, what sets you apart. And in a lot of cases, a lot of companies, and looking at some of the people who've signed up for the call today, I know this applies to a lot of your sectors. A lot of your competitors are what I call lazy marketers, and they market on price or value. And value is determined they use a lot of different words for that. They'll say it's the quality of the service, or it's the value for money, or something along those kinds of lines. And if you divide your competitors up, and I like to do this, just draw this up on a whiteboard, get a bunch of post-it notes, and write down the names of all your competitors and place them on this graph where they belong. Who are the ones who are low price, low value? Who are the and up here, if they're low value but they're expensive, you put them further up the chart here. If they're high value and low cost, they go right down the bottom, and you can just sort of see in the graph where they kind of place themselves. And what you're looking for is you're looking for a way to position yourself as being, something that really stands itself out and resonates really well with your marketplace, which typically could be something that's good value for money, not necessarily cheap, but it's a really high value offering. So you give yourself something that stands you out from being in what I call the white noise marketing, which is all around the edges here. It's where you're going to find most of the competitors in a lot of typical industries today. Even better than this, though, however, is looking at how your competitors are playing in that space, and going back to what we talked about before about redefining the category, creating a new category, a different approach to solving the same problem that your competitors are trying to solve, positioning yourself as completely separate, apart in a whole new way. And so really getting into the competitor analysis, how are they actually positioning themselves, and who are the customers that they're working with, and how can we actually present a completely different proposition? It's the best way to use your competitors' intelligence against them. So looking at some growth strategies that you can look at. So when you're building a business plan and it's for raising capital, or it's for growth in particular, or you're starting out, there's really just three different approaches. You can either talk about, we're going to go into new markets, we're going to look for more customers just like the ones we've got, but they're going to be somewhere else. So if you're Sydney based, you might say, well, let's go to more regional New South Wales, or let's go to Queensland, Victoria. Markets that are somewhat similar to us, customers just like ours, but we haven't had reach in there yet. You might talk about going overseas. Or you might talk about going into new verticals. So, if you sell lawnmowers, you might start getting into selling
different type of product or something,
chainsaws or something like that. But
Add-ons.
the same sorts of thing can apply. It's basically new verticals. You're looking for other products or services that the exact same clients might use, and obviously the most obvious ones to look at are the ones that become immediately before what you're currently selling, or immediately after. That would be used by the same people in a similar kind of setting. And the other more riskier approach is to go new markets and new verticals all at the same time. And it is riskier because you've got exposure to two different elements, and if it's not successful, it might be difficult to tell what was the factor
what went wrong.
So one or the other is usually better, but sometimes the situation you find yourself in for competitive reasons or for distress on the business, you might have to explore that. Those are the three basic ways that you point your ship towards growth. In terms of growing more market, but there's also another way to look at it as well, in terms of getting more out of what you currently have right now. And this potentially could apply to where Karen was looking at things in terms of her question. And, it's called the 10% rule, and it's very basic. It's like, how can we actually get more out of what we've got? What if we could reduce the cost of the business by 10%? So take, for example, if you've got a company that's turning over $1 million and currently making 100,000 out of that, if you reduced your cost by 10%, you've almost doubled your return right there. If you can also increase your number of sales by 10%, and you can also increase the value of the average sale by 10%, when you do the maths on all of this, you've almost doubled the return that you're getting again out of the business. So you've got a bit of growth, but you also, the return you're getting out of it is considerably higher, and that can help you pay for future growth as well. Because as I said before, growth is expensive if you want to do it in a particularly big way. And the metrics around growth, around fast growth and growth in general, if you're not growing by at least 5%, then you're probably in real terms going backwards. So it's pretty dangerous to not be doing
Yeah.
at least that. So 10% is a good basic target to be heading for. Unless you want to really shoot for high growth, or the situation, the market's forcing you to really push for high growth. And high growth is classified as anything 20% or above. And the reason for that is simply because 20% or above is hard to do without additional funding through debt or investment. Most companies, and you see those numbers, if you've got 10%, and you've got 10% of money to pay for your growth out of the profits. And looking at what's the actual cost of acquisition of a new customer, and that's a really good question to always be able to answer for yourself. How much does it actually cost me to get a new customer, and therefore how much money do I need to achieve the growth targets that I'm after? So anything greater than 20% is considered high growth, and at that rate, you'll double the size of your business in about 4 years. If you can achieve 25%, you'll do it in a little over 3 years, and if you can do as much as 40%, you'll do it in just a couple of years and a bit.
That's great, John. I just was wondering as well, these are obviously really great tools to guide your thinking, but are there any other third-party tools you would recommend to get you started?
You mean apart from Business Propel?
Apart from Business Propel.
So it's an obvious one, that tool's right there, and as you said, you can put as much or as little detail in there as you like, get just a 2-page business plan or a very comprehensive one. In terms of actually figuring out what your business model is, there's tools out there called the Business Model Canvas, and a subset tool of that's called the Customer Proposition Canvas, which plays into that, doing that as a separate exercise to figure out what is that core proposition that I'm offering to the marketplace that's unique, and how do I then expand that into a business model. If you just Google those terms, Business Model Canvas and Customer Proposition Canvas, you'll get links to online tools and books that you can buy. And the online tools will actually allow you to develop those canvases right there in front of your eyes, and they're really informative. They help you to then get a clear idea of what you're actually looking at building. And the customer proposition canvas in particular, you make a whole bunch of assumptions in that, and then you go to your customers and you say, have I got this right? Have I actually read you right in terms of what actually drives you to make the purchase decision? What makes you happy? What gets you upset? Am I really understanding you really well? You've got a tool then to get that really informative feedback and create that differentiation. They're two of the best ones that I would definitely recommend using anytime that you're looking at doing any kind of business planning.
That's great. Well, if any of the listeners online would like to go and check out Business Propel as another tool, we've got the basic business plan online, which can help you step by step, question by question. It's got recommended goals to your business plan, as well as mission statements. You can add objectives as well. So you're guided through the core of what you need to develop a plan to start or improve your business. Also got here, as I mentioned, the recommended objectives and action plans. So you can actually link action plans to that business plan as well. So if you want to check out Propel, it's free, the basic business plan, just to get you started, and have a think of those questions before you go online, as to what John mentioned beforehand, before you make that start.
Just going back on while you're talking about that in terms of Karen's question earlier. So Karen, you could use this tool here to get your plan together, and then you can actually use the action plan section inside Business Propel to communicate exactly with any team members that you're working with what you actually need them to do as part of achieving that plan. So it's actually a living document helping you action the plan, not just write it in the first place. So it's more than just an authoring tool.
For more comprehensive plans, you can access that through Propel, but we'd actually suggest contacting a professional like John to talk you through the steps, particularly when you decide as to what the business plan is for. So John has some information now about the business appearing on screen. So I noticed there, John, you've worked with quite a range of clients. Yeah,
so we've worked with very small businesses, and we've also worked with some of the largest companies in the world in their sectors. So typically in Australia, we'll work with SMEs or the Australian office of a large multinational on a range of different areas. Our team's quite diverse and dynamic. We work with companies who need help with the marketing of their business, the sales side of their business, the operation with the people and the process, and also with the financial management. We have a range of different team members. So start, grow, fund and exit is the query. That's what people come to us with. They say we want to do something that for us is significant, and then we deploy our members of our team as required according to the other side of that circle there: strategy, people, marketing, sales, operation and finance. And there's a bit of a breakdown there of how that may actually play out in the business.
As well.
And the way the engagement usually works is we start with doing a gap analysis and benchmarking against the rest of the industry that you're in. We provide consulting and resourcing, and we deliver a capability that may currently be vacant from your business, and we get the results for you. So it's not just the strategy, it's also the execution. We like to fill the gaps that are vacant in the business and get the job done. Some of the things that we've been able to achieve just there across a bunch of, including significant safety improvements, operational efficiencies, massive increase in sales, increase in customer satisfaction, and much better performance from the teams within your company. But really, in short, coming back to the whole concept of what business planning is and how it works for your business and what it's all about, my golden rule there is that if you don't know what you want, you can't have it. Business planning is really an extension of goal setting. It's just got a lot more detail in it depending on what you actually require. So as I said, we're a team. This is the other members of the team and the different specialisations that they all have. And if you've wanted to have a conversation about how we can help you with your business planning or with any other aspect of your business, we're more than happy to sit down with you in person or over the phone and get into it in a bit of detail. And as we said in the marketing for this event, we guarantee to add value through that process. It won't just be a sales chat. It'll be we'll give you something you can work with it as a result of that conversation, whether you choose to use us or not.
That's great. Thanks, John. So once again, you can message us in the chat box here on Livestorm on the webinar, or you can go to Propel and contact John through the consultants page there. If you go to the next slide, we've actually got John's details appearing on screen now as well. So we'll make sure to be in touch with John. If you've got any questions whatsoever or you'd like that 30-minute chat, please do not hesitate to contact John for some more advice. That is John Hagerty at thebusiness.com.au. We hope you enjoyed listening today. Look out for our next webinar, Digital Life, the law playing catch-up. And really, thanks, John, for joining us today. It was really insightful.
Oh, thank you very much. Thank you everyone for being here.
Thank you, everyone, and we'll see you next time.